The management of Jain Irrigation. Remember, the company is in focus because they have acquired 80% in two American companies called Agri Valley and Irrigation Design and Construction. Anil Jain, the managing director of the company, joins us on the phone line. Good afternoon, sir, and thanks so much for joining in. First, if you could, tell us, how much will you be paying for it? How will the acquisition be funded? Because you're saying you will, it will be paid in cash, not exceeding 48.5 million. What will it do to your revenue? Just give us some details.
Yes, good afternoon. For us, this is a very important and strategic investment and acquisition into US. US is, the largest irrigation market in the world. We already have an existing business where we manufacture drip irrigation equipment and sell it. These companies which we are acquiring are in distribution, so they distribute. So they are directly dealing with the farmers.
Okay.
We wanted to, be sure that we can have direct relationship and reach out to the farming community there.
Correct.
In the recent past, you might have seen we talked about investing into AgTech, in Internet of Things, etc.
Right.
We did two acquisitions in Pure Sense and Observant, and as a logical step, we want to deploy those latest technologies and IoT directly onto farmers' field. So this acquisition also allows us to reach out to the farmers and deploy the latest technology, build the solutions, because the whole world is changing, moving towards IoT and the digital stuff, and we want to maintain our global level leadership there. Now, that is the reason we are doing it. Now, these two particular entities are one of the largest, the dealers of the irrigation anywhere in the world. Usually the irrigation dealers, their size is 1 million, 5 million, 10 million. Entities themselves are 50, 60 million. So very large entities.
Correct.
So it's quite deep and a good size business.
All right.
In terms of their size, in terms of revenue, the year they finished, calendar year, it was about 113 million between both of them.
Correct.
And, last year, as you know, there was a huge drought in California last couple of years. But last 4 months, there have been very good rains.
All right.
And they expect, good business going forward. So we are looking at a, good level of growth going forward into this revenue which is there. Now, this acquisition, along with our existing irrigation business in US, allows us to be the largest micro irrigation company in US.
All right.
We have been leader in India, and now we are looking at that leadership level across different businesses. And these businesses are quite profitable. Their EBITDA margins are actually higher than our EBITDA margins in US.
All right. Mr. Jain, thanks so much for all those details, sir. The number 113 million, that would be close to around, it would be adding close to around 8 to around 9% to your total revenues. So I think in the last year did around 113 million. Can you, do you see scaling up of these revenues? And also you're saying the margins are better. For your 9 months, I think you've done around 13.5% or thereabouts. How much better? Is it 100 basis points, 200 basis points better?
Their margins within the irrigation business are better than our US irrigation business.
All right.
Our India margins are different. They are much higher.
So what are your US irrigation margins then? And if you could tell us, straight away then what the margins of the acquired company are?
So our US irrigation margins have hovered around 6-7% of EBITDA.
Okay.
These people, their margins would be closer to 10-11%. So there's, quite a wide gap and positive margins they have.
All right. And it will add close to around 8 to 9% to your total revenues?
It would add, I think the FY17 as a company and depending on that whole exchange rate, I think we are closing around 1.1 billion.
Okay.
In that context, this 113 is very close to about 10%.
10%.
Of the overall company's global revenue.
Right. Mr. Jain, how will you fund this particular acquisition? I'm told that you're going to be investing around 350 crores. That's for 80%. Is that right? How will you be funding this? And what is the current debt in your books?
So the funding would be done partly through equity and partly through debt.
Oh.
The debt we have, and when I say equity, that means our internal accruals.
Okay.
Contribution, not raising any new equity.
Okay.
Accruals. And the debt we are funding through long-term 7-year debt, with the Exim Bank of India. So there is no issue on that side. And overall, as a company, I think we have said this earlier that we want to move close to, let's say, 5 times. We used to be EV/EBITDA 5 times. by this March, I expect that we would have closed maybe around 4. And our target for March 18, EV/EBITDA is about 3. And I expect our debt equity to be less than 1 by the time we end the current fiscal year.
The debt to equity to drop below 1 by the end of FY18. Sir, if you could break up this investment of 350 crore, what percentage in equity and what percentage in debt? And once you take on this debt funding, what would the long-term debt in the books look like?
So our overall long-term debt now on the Indian books is limited. Recently, if you remember, in February, we did a $200 million bond issue. And at that point of time, the bond itself, there was a possibility we could have done green shoe, but we found, in terms of timing, this was a better right timing.
Correct.
Overall, including working capital debt, we plan to keep the overall debt by the end of the current fiscal post-acquisition and post-date of this acquisition also to be less than 1.
Okay,
Yes.
fair enough. But, if you could break up 350 crore, how much will be funded by, why the cash in the company's books?
It's about 80-20.
80-20. All right, sir. Do you have an option to buy the remaining 20%?
Yeah, we have a call option, but it's an earn-out model.
Okay.
Those people, the promoters of these entities would continue to run, manage, and grow the businesses.
Correct. All right. Mr. Jain, also if you could tell us, you were breaking up the debt for us. You were telling us about how much debt you will raise for this acquisition, etc. What is the total consolidated debt in your books as of now? I remember you told us some time ago that you will be looking to pay off around 200 to around 300 crores. So, considering everything, this acquisition, etc., what should that consolidated debt in your books look like? And in fact, what is your borrowing cost? Because you had done some refinancing, I think, just a short while back.
Yeah, I think our interest costs are coming down. In terms of overall debt, if you look at our December number, I think the debt was, significantly higher than, it was 4,300, 4,400 crore.
Okay.
You will see the debt for March already less than 4,000 crores.
Okay.
And as I said, by the time we end the current fiscal year, we should have debt equity less than 1.
Okay. With this acquisition, what percentage of your overall revenue, sir, will come in from the United States? And considering that, they operate at lower margins than your India business, on the whole, on a consolidated basis, do you think this acquisition would be to some extent margin dilutive?
No, the overall acquisition is margin accretive because we will be making more in US than what we used to make earlier. So in that sense, it is quite positive. In terms of our overall US business, earlier our US business was, let's say, about close to irrigation business I'm talking about, 75 million, and now we are adding about, let's say, close to 110 plus million to US piece. We have other $50 million approximate food business in US and another sheet business. So all in all, this would make US to be, after India, second largest geographical business territory for us.
All right, Mr. Jain, just to revisit that number, you said as of December end, it was at around 4,300 crores, right? Your debt, and that's going to be below 4,000. So on a sequential basis, it's down by more than 8% is what you're trying to tell us, the debt number?
Yeah, in the fourth quarter, we had talked about that
Okay.
we will have significant reduction in
Perfect. All right, Mr. Jain.
Yeah, just before we let you go, I also had a question on your plans for farm fresh foods. A couple of quarters ago, you had hived off the entity, and at that time, you had indicated the possibility of bringing in strategic investors. What's the progress on that?
So, in fact, we brought in the strategic investor last year, where we sold in that entity 15% stake, and that was sold at $60 million for 15% approximately. So we got a very good valuation, and that entity will grow over next 2-3 years, and thereafter we have a chance to do value monetization as and when we list that particular food.
And what is the plan with respect to listing?
There is no specific firm date or a plan, but eventually we will plan to list the food business once we believe that there would be a right amount of critical mass and a right valuation one can get.
All right, final question, Mr. Jain. Since we have you with us, what's the current order book, if you could give us some numbers, and if you could break it up for us as well geographically?
The current order book is close to about 15 to 1700 crores
Okay.
out of India across different business lines. And, yesterday IMD has come up with a positive view on the monsoon. And you also have been, the government on 1st February budget was also very supportive of this particular industry. They created the new fund through the NABARD for 5,000 crores. So we are really seeing very good conditions for, nice growth next year. But I would talk about next year numbers more when we come up with the results for the March quarter rather than today.
Okay, Mr. Jain, we'll leave it at that. Appreciate you talking to us, and we'll speak again when the Q4 numbers